What's up guys, welcome back to Real Talk. Long time no see. I know I've not uploaded a video in like 2 months. It's just I've been transitioning from a place of work to another place of work, so I've been really busy. But in today's video, I want to do another video on insurance and finance on cars, because my previous video that I done quite a while back now, got so many messages, so many replies on the actual video itself about insurance, about how you should buy your next car, things like that. So I thought I'd do another video on that subject. So without further ado, let's get into the video. So this is my first video in quite a long time. As I'd mentioned in the intro, I do apologise, and I apologise at the end, or at the end or the beginning of every video I do, saying I promise I'll get regular content out. So I'm not going to say it this time. It's just it has been so crazy the last few months. It's just I've not had time to do anything, absolutely anything. But like I said in the intro, I'm going to be talking about car finance, and I'm also going to be talking about car insurance. Reason for it is that video I done, how did I buy an M140 in 20, the amount of, I'm still getting direct messages basically on Instagram, still getting comments on the YouTube. Just, it's been probably the most viewed, not one of the most viewed, but the most interactive video that I've actually done. So I thought I'd do another video on it just to clear up some of the questions that I'd actually got previously. Now, one thing I want to clear up is I have got quite a lot of hate from a lot of people about mummy and daddy's money. First of all, I don't normally swear on my videos, but it pisses me off because I've worked hard for everything that I've got. I've never had any hand-me-outs, so I just want to clear that up now. For anyone who has got a problem with that and doesn't believe me, I'm happy to meet up with you, show you my bank statements, which this is just too fucking far anyway, but I'm happy to show you that I have paid for everything that I've got, including my house, including my car as well. So hopefully that clears out, or clears up a lot of the comments that might come into this video. On a more positive note, welcome back to Real Talk. Let's start off with finance. Now, a lot of people did say on the video, oh, you're stupid saying that you'd actually save money if you finance. I understand what they're saying, but in some cases with car finance, if you're clever about it, you will actually save some money. Now, an example of this is, let's just use Tom. Don't know Tom, random guy, first name that came to my head. He walks into a dealership, he's got £10,000 and he's seen a car for £10,000, okay? Now, of course, he can buy that cash, no problem at all. But there could be various incentives at the dealership. For instance, 0% finance. Now, my car is on 0% finance, so why would I fork out all of my capital on one car when I can just finance it and I won't actually pay back any more than what the actual car is worth? So I can save some money in the bank, I can invest that in other things, I can spend it on other things. It's up to you what you want to do with that money. But that is one instance. If it's 0% finance, would you buy a house outright? No, you wouldn't. You'd mortgage it and you'd save some money. Because I had a disagreement with someone who commented on my video saying, oh, if you had the money to buy a house outright, you'd be stupid not to. Well, I'd actually buy a few properties with that money. So rather than forking all your capital into one thing, at least you can put it into different things. So that is one example of a finance incentive. Another one is if there are some kind of FDAs involved, or if there's like, if you finance the car, you will, you'll benefit from servicing, for instance. So a way to get around that is a lot of people are like, oh, well, on a used car, for instance, your typical APR is 9.9%. So if you walk into a dealership with your 10 grand, you found a car for 10 grand, and the sales exec, whoever, says, oh, have you thought about financing? You're like, no, I'm strictly cash. Now there's a clever way of doing it, because if you finance the vehicle, and they say, oh, but you benefit from servicing if you finance, ask what the minimum term is and the minimum amount, because that way, in theory, if you were to sign up on finance, just an example, if you were to spend £6,000 say on finance over 36 months, your interest on 9.9% is equivalent to about £915, there or thereabouts, okay? That's your interest. But the servicing you'd get, say for instance if they said you get 2 or 3 year servicing or breakdown cover, if it works out more than the interest, and really and truly it's like it's 0% finance as well. But then if you're smart about it, if there's ways of you getting out the finance earlier, then you can. So let's just go back to Tom for instance. He's got his 10 grand. Hi Tom, give me £4,000. You finance the 6. You get your servicing. You get whatever else that's been thrown in. And if Tom thinks, oh, do you know what? I've done that now. I've got my servicing. I want to pay my finance off because I've got that cash available. You can. And they may let you keep the servicing or not. So there's clever ways of getting around it, for instance. So for anyone who's saying, if you've got the cash, buy it cash, that's not always the best thing to do. That is just my personal preference. Going on to the different types of finance again. So like I briefly mentioned on the previous video that I've done on finance, you've got 2 different types of finance. You've got your traditional type of finance, which is HP, hire purchase, and you've got your personal contract purchase, PCP, commonly referred to. Now, a lot of people are on PCP. Yes, it is an easy way to get into a car that you can't afford. That's what people like to say. But it's actually quite a clever way of doing it. So let's break down hire purchase first of all, what it consists of, what it is, how it works. So in essence, you put a deposit down on a car, you then select your terms, so 36 months, 48 months, even 5 years, some dealerships do. You then pay that monthly amount for that period. Once you've got to the end of that period, you've fully paid off the car, okay? So that is your hire purchase. Now, a lot of people don't know with hire purchase, you are able to voluntarily terminate, so VT, halfway through the total amount payable. Now, a lot of people think that's only applicable on a PCP, but it's not. So for instance, if you take a car out over 5 years, in 2.5 years, after you've paid half of it back, you can technically just give the car back to the finance company. So you've enjoyed a lower monthly payment, but you've not actually had it full that 5 years. So a lot of people don't actually know. Now, a personal contract purchase, a lot of people are still quite confused with it. People say it's the next PPI. I don't get what they mean by that. That's just a load of shit. So PCP, I like to say it's the perfect way, or it's the perfect compromise between hire purchase and a leasing a vehicle, okay? So how it works is you come in, you'd see a car that you want, you then, rather than it being divided into deposit and your monthly payments, it's actually divided into 3 categories. I struggled there a bit. So the 3 categories are your deposit, monthly payments, and then your balloon payment or GMFE, which is your guaranteed minimum future value. What that does is it actually protects you. So let's just say you wanted to finance £10,000 worth of car. So we're going back to the example that I was saying earlier. On hire purchase, you put a £1,000 deposit, you finance £9,000. Now on a PCP, you put a £1,000 deposit, but your guaranteed minimum future value at the end of that agreement is £4,000. So in essence, you're actually only financing £5,000. So your monthly payments are going to be cheaper. So how the monthly payments are determined are to do with your mileage and your term. That is pretty much it, and as well as your deposit. So if you set your finance agreement up over 36 months, set it at 10,000 miles a year, your monthly payment will be X. Of course, if you put the mileage up, your guaranteed future minimum value, or your guaranteed minimum future value at the end of the agreement will be lower, because obviously the car's done more miles, meaning your monthly payment will go up. So hopefully I've explained that quite well. The same with the hire purchase, you can voluntarily terminate your contract, okay? That is when the total amount payable, that's when half of the total amount is paid, okay? So the total amount payable, half of it could be typically on a 4-year agreement, it tends to be 3 and a bit years in where you can voluntarily terminate as well. When I say it's the perfect compromise between hire purchase and leasing, is because at the end of that agreement, when you reach your guaranteed minimum future value, okay, that is something that is generated when you first sign up to the finance, okay? So in 4 years' time, the dealership will promise you a guaranteed value of your vehicle after that term and set to your mileage, okay? So if you say 10,000 miles a year for 4 years, so in 4 years' time, if your car's done 40,000 miles, they guarantee that your car will be worth this. Now, in essence, people say it's like fixing your utility bill, or, you know, reducing the rate of your utility bill. The reason why they say that is you're looking after yourself in the future. So with cars, you know how technology works. Hybrid cars, electric cars, flying cars, cars running off water, I don't know what the future holds. But if that were to happen, what do you think would happen to prices of vehicles? They would drop. So in essence, you would be protected on a personal contract purchase because you've got that guaranteed minimum future value. Of course, if you exceed your mileage, there are charges that are applicable, pence per mileage, and obviously you won't be given that guaranteed minimum future value. Now, it's a lot to take in. You're not tied in at all to a personal contract purchase or a hire purchase. You can always sell your car whenever you like, but you may have negative equity. That is where your car finance is actually more than what your car is worth, okay? So for instance, if you were really in a shit situation, you need to get rid of your car, but your finance is £2,000 more, you would simply have to pay that and hand the car back, or just pay off the finance, for instance. So you can sell your car privately. At the end of your PCP, you've got 3 options. This is where I say it's perfect compromise between financing via hire purchase and leasing, because you can give the car back at the end of the agreement. You could pay the balloon payment, or the GMFE, however you want to refer to it, refinance it as well, or you can look at trading your car in to start another agreement. That is the main thing about PCP, is you want to get into a routine about it. You want to put the smallest deposit you can, afford the monthly payments, so then every 3 or 4 years you can put the same deposit and get into another car and achieve roughly the same monthly payment as well. So that gives you 3 different options at the end of that agreement, whereas a hire purchase doesn't, and a lease you just have to hand the car back. So everyone knows how a lease works. So that is finance explained. Now hopefully a lot of people understand what I've said. A lot of people who are looking to finance their vehicle, hopefully this video has proven helpful. On to insurance again, because it is that time of year for me as well. I need to start shopping, and unfortunately insurance prices have gone up considerably. I mean, my insurance quote at the moment is coming back about £1,000 more than I had originally paid last year. I think I paid £1,200, something like that. So for those who are looking to insure a fast car for themselves, a lot of people who have messaged me said, "How, I'm your age, I've got the same car, but my insurance is £2,000 more than you." Now, a lot of reasoning behind that is your location, okay? Your location has probably the biggest impact on insurance prices. I used to live down in London. As you know, typically as you do, you look around, out of curiosity, you want to see what it is. I can tell you the insurance price to insure this vehicle down in London compared to Cheshire, where I live now, is pretty much double. So that is one reason. But things to look for when insuring your car: go on all the price comparison websites, go direct onto the websites, and don't be afraid to call up. If they give you an insurance quote, and I've had mates who've done it, I've done it myself, if you get an insurance quote online, ring them up and say that you've got a better insurance quote elsewhere. A friend of mine actually rang up and his insurance reduced by £700 just from him ringing up and saying that he's found it cheaper. So that is one thing that you can do. As I mentioned in my other video, add named drivers, not main drivers. If you want to, you can. Of course, that bring your insurance down, but I'm not sure if you benefit from no years claims. But add drivers, add your mum, add your dad, add people with a load of experience. Obviously not too old, because I think insurance prices start rising when you're like above 110 or some bullshit like that. But that is another thing to look for. And like I said, just shop around 100%. Take your time, but don't be looking everywhere, because I do believe the more you start searching all these websites now, they're not thick. They'll know that you're looking for insurance, and I've noticed if you keep on checking, your insurance premium starts going up ever so slightly. So don't be absolutely bombarding it. Your best bet is probably just doing a few, ringing up and trying to get the best price possible. Don't lie about your insurance for one. Now, you can get away with white lies, but don't say your car is insured somewhere when it's not, because if you have an accident, and someone has actually messaged me this, and I 100% get why you'd do it, but if you had an accident and your car is insured elsewhere, you wouldn't get a payout. It is as simple as. You would not get a payout 100%. So be honest, be genuine with your insurance, but have a play around with all the settings, you know, with your mileage. See if it makes a difference if you change it from 8,000 to 10,000, or if it's parked on the drive, or if it's parked outside. Sometimes it makes a difference. Don't think because, I've said I put it in a garage, even though it's not in the garage, it's going to bring your insurance premium down. Because a lot of people who say it's in the garage, if their cars are stolen, when it's actually parked on the street, of course insurance prices are going to rise if you say that your car's parked in the garage. But any questions that you do have, make sure you pop me a direct message on Instagram. Put that up now. I'm sure you all know it. For any who views this video, please follow my Instagram. It would honestly mean a lot, because obviously I've got quite a few subscribers. Comparing it to my Instagram followers, it's less than half. So if you could just give me a follow back, that would be fantastic. That concludes today's video. So like I mentioned, I do apologise that I've not uploaded in a while, but this video is mainly for all the questions that have been directed at me for the last few months since my previous video. So I hope you guys enjoyed it. Don't forget to like, comment and subscribe, and I'll see you soon. Take care.